Good morning, ladies and gentlemen. This is Clueless 8. It's the pre-market AM report for Tuesday, March 2nd, 2016. Here's a couple of observations and forecasts on what's happening with the markets. As I've mentioned for weeks now, that given technical conditions, given sentiment, extreme bearish sentiment, that the market would have a powerful, violent reflex rebound. If you review, members who have reviewed my past videocasts, my Periscope broadcasts, and my charts are clearly aware and not surprised by the reaction of the markets, the way things have unfolded over the past couple of weeks. A lot of people who are unaware of the underlying behavioral and technical dynamics of the market are constantly surprised by what goes on, why markets from the depths of breaking down below 1800, the Dow in the 15,000s, can rally up almost to 17,000 in a matter of 2 weeks. Pattern symmetry counts. I've shown that repeatedly and I've explained that clearly. We have had numerous large winners, some minor losers, but primarily large gainers in the forms of the big cap stocks, high beta, momentum stocks like Amazon, Google, Netflix, Apple, even Tesla, both on the long and short side. Priceline, CMG, not to mention the oil plays in the form of the oil shorts, DWTI, which have enormous winners on a consistent basis for active traders. And then a couple of longer term swing trades have worked out tremendously well on the biotech side. Case one that should be highlighted is Juno Therapeutics. Let's get into the technicals as to where we are right now. You can clearly see here we have a Davos bottleneck again, which I've highlighted before. The previous bottleneck broke out to the upside. This is the bottleneck I'm showing you right now. Let me get the drawing tool. Before I go further, it's extremely important for all traders, investors, and members to understand that if you do not comprehend and fully understand, or to a large degree understand, the technicals and the charting that I produce, the premium content, the precision tactical trades that I like to mention, then you're going to be lost in this market. And many of you have. More than 90% of traders on the outside have missed a substantial portion of this powerful rally from the bottom. Hoping and chasing are not investment strategies. So the more you understand how charts work, the more you understand my take and translation of what goes on in the markets, the better off you will be in managing your own trades. Trade management is key. Remember, you have all the tools in front of you, shown from the depths of the market here. The question is, how do you manage your trades? How do you react on your mental conditioning to act and profit from what you have in front of you? It's not the content that I produce. They are overall very, very accurate. It's you. It's up to you to utilize that and benefit from. And I believe that I have a hunch that many of you who have not taken the time or the energy to join the advanced group sessions, which I constantly promote as a powerful learning tool. Ask the ones who have engaged in these sessions repeatedly how much they've benefited from participating in those learning webinars. So I highly suggest the ones who are sitting on the sidelines, still sort of trading blind, sign up immediately and join the weekend sessions that I have. I also have group sessions during the weekdays too. All right, so here we are. We have a Darvas bottleneck. You can see that here, right there. And this is where we are. This is the bottleneck right there. Now, what does it mean? Well, look, see this candle here. This is an inverted hammer. This is on the daily charts, okay? So it carries a little bit more weight. So the inverted hammer is saying that the markets right now meaning, let's say over the next 24 to 48 hours, needs to reset because things got fast and furious and overbought very, very, very quickly. Now, resets can happen very quickly too. We could have a 50-point pullback on the Dow and we could reset and then continue the rally. The channel that you see here, this channel, okay, this channel that you see is still intact with the low end of the channel somewhere around 1950 and the upper end of the channel somewhere around 2040. And I believe that this channel is going to get resolved. But in between, the market will basically have some structured volatility. In other words, will swing around traders, get them out of positions, and then move along where it wants to go. The Davos box is pointing out that we, at this point here, we have inverted hammer, and that it very might pull back towards the 1960 level, give or take 100-point pullback on the Dow to get things settled out before it moves forward towards the end of the week. Keep in mind, Wednesdays, historically speaking, from what we have observed and acted on, have been red Wednesdays. There's an 80% probability or so or more that Wednesdays turn out to be red. In other words, profit taking. Just the way we had this type of this is a consolidation channel that I pointed out repeatedly. A consolidation channel is not to be feared. We acted on it. We had S&P puts that went from 2 to 21 or 2 to 19. Humongous moves. When you let go of those type of trades and you don't participate in them, I don't know what to say. No one's saying that you got to buy something at 2 or 3 and hold it all the way to 21 because we don't know it's going to pull back like that. I mean, it's going to have such humongous 800, 700% plus type of gains. But you can get, most of the meat in the middle. So act. Don't sit there. So we had that consolidation channel, just the way we had a small one here. And this is the nature of a upwardly thrusting reflex retracement rally. It simply means that the market is retracing this humongous drop and the retracement rally ends or can get up all the way up to 2070 to complete the pattern. It's happened before. It happened as I've said millions of times, it happened in August of 2015 during the huge flash crash and the preceding fallout in the market. It happened a month later on September 29, and then it retraced everything back. Now, the problems in the world are not going to go away. There's always going to be crises. There's going to be fallouts on the high yield bond side. There'll be Chinese markets selling off 7-8%. There'll be all kinds of political issues that's going to dominate the news flow, affecting markets. But patterns don't change. Not to say that it's going to always happen the same way. So at this point in time, a pullback, this is, if you really want to look at it, this was the breakout level. See this red line here? This was the big dragon bullish breakout right there, somewhere around 1940. So you had the consolidation channel, market pulled back a little bit, and this huge breadth thrust that caused a 350-point rally yesterday, which took all the forecasts I had on the Amazons, the Googles, the price lines, you name it, up to exactly, give or take a few points, to the same levels. Go review the charts to the levels that I forecasted and marked. It's not magic. That's just the way machines work. This is a machine-driven market. Never forget that. This is not mom and pop driving these stocks. We also had huge corporate buybacks that set off in the last week in February. which I mentioned, which I posted the article and I talked about a few weeks ago. Corporate buybacks are huge. Corporations saw their stocks getting smashed all the way down here and they started buying. They can't buy. Corporate buybacks by law, from what I understand, cannot happen during earnings periods. But when earnings are out of the way, they start buying up their own stock. They have billions of dollars in cash and they deploy it with fury. And then you have the other factors come into play, such as oil prices stabilizing, all kinds of stuff. A couple of strong economic numbers, and that does it. So this rally continues for now. At this point, worst case scenario, we get down towards 1940. You're talking about roughly a 200-point move down to the bottom of the channel right here. This channel, this white line, easy to see. And from this point, we could move up sharply and try to gain the attack this downtrend line, this red line that you see at around 2000. E-minis, of course, here, this is the futures we're looking at. So you're talking about 2000 and change, maybe 2006 or so on the S&P 500. And then if we break this, it's going to be a fast move up to the upper end of the channel, which is around 2040. So you have to really train your brain how to understand these things, because the more you understand the background of what you're trading in, which is the stock market, then you can manage your trades better. Stocks all of a sudden move down, you know, when we had this consolidation move down and the fake out that happened, and it was a bear trap on Tuesday, on Monday afternoon, it looked like the world was going to end. And the next morning you wake up, futures are up 15, and then we have a 350-point rally, nonstop. Look at this candle. This is a powerful candle. And if this candle is not fully extinguished below 1920, which is right here, this uptrend is intact. A minor retracement giving back 50% of this candle, bringing us down towards 1940 or so. I'm sorry, 1950 or so on the S&P 500 also, is fine. It's not to be feared. By that time, we'll have all the resets in place. Oversold again. Now we are quite overbought, and as I can see here on my Algo HFT charts on one of my other screens, we are already in the process of getting oversold, believe it or not, which features down about 6. I'm going to post the Algo charts, and people with a keen eye and a desire to learn and profit how this thing works, how the game works, can see that clearly. So once the hourly reset happens, you're going to see another move up. So that's it. This is the daily chart that I'm showing you. This channel is intact, and the markets, in my opinion, want to attack the downtrend line above 2000 S&P 500. And I think it happens by the end of this week. If we break down below 1950, then that's a different story. Then the trend change is a little bit more severe, and this consolidation move brings us down and retest 1920 again. 1920 is a line in the sand. 1920 S&P 500, SPX. Below that, the trend changes, and a different set of bearish market technicals come into play. But I'm not going there yet. Let's see what happens. Oil is a major factor that drives markets, as we know. So we have to monitor that. So this is the daily chart that you're looking at. Let me quickly show you the hourly chart. Just have a few seconds on that, and you can see that we're already in oversold territory with the futures down about 5 or 6, down 5. So again, trying to short the market at the open might not be too smart. Look at what's going on with the Darvis, which I track very closely for technical trades. We have a bottleneck here on the Bollingers. You can see that. And this bottleneck looks like it wants to resolve higher, in my opinion, now that we're oversold. Thank you for listening. Sign up for the advanced coaching. It's been fantastic week and even the month, long and short. Thank you for listening.